Hello and welcome to Talking Stocks here on CNN-FN. I'm Sasha Salama. Today our guest is Eugene Profit. Yes, Profit. He's president and portfolio manager at Profit Funds, and he is a value guy. He's got an interesting view of what value stocks are. We'll ask him about that. He focuses mainly on large cap stocks. Technology, drug, retail, and defense sectors are some of his favorites. Now, this is an interactive show. Eugene is here for an hour to answer your questions about individual stocks or the market in general. So take advantage of it. Our phone number is 1-800-304-FNET. You also can email us. We're getting lots of emails lately, even during the show. Our web address is talking.stocks@turner.com. Talking.stocks@turner.com. We'll be mixing in your emails as well as your phone calls for Eugene. But first, we want to give you an overview of where the market stands. The NASDAQ has been in positive territory all day, up more than 2% right now, 38.67. That's just a few points off the high for the session. We have got pretty weak volume, though, on a summer Monday, with lots of tech heavyweights reporting results later this week. Let's check in now with John Metaxas for some details on today's action. Hi there, John.
Hi there, Sasha. We're getting some follow-through buying here today after that TAM employment report on Friday. Maybe some of the buyers came back from vacation and they're in the market right now. NASDAQ reaching close to its high of the session right now, up 79 points at 38.67. Advancers ahead of decliners by a 4-3 margin, and the technology sectors are doing very well today, led by biotech, which is up 3%. We've got all 5 of our most actively traded stocks doing very well today, and this is a nice way to begin the week. Cisco Systems up 1 3/8 at 66 7/8. This is ahead of their earnings report tomorrow. This is fourth quarter for them. 15 cents a share is expected. UBS Warburg expects them to report in line or a penny better than expectations. I guess you'd call that the whisper number. And they expect continued strong trends in cash flow generation, balance sheet metrics, and book-to-bill. They maintain a buy rating and an $85 price target. That stock moving higher. 3Com has been doing very well ever since they split off their Palm unit. They have some news today. They're up 5/8 at 18 9/16. They've taken an undisclosed equity stake in intelligent device company Xiante. The two companies plan to work together to make it easier for consumers to plug into the internet. And analysts are calling the new product Slick. We have Microsoft up 1 5/8 at 70 7/8. Microsoft announcing a share repurchase plan for their employee stock option and stock purchase plans. Number of shares to be purchased will be based on the number of employees exercising their options. Microsoft SQL Server 2000 also goes into production. The software provides a database platform for e-commerce. Intel moving higher, and the chip leader coming back today, up 1 9/16 at 64 1/8. They've introduced the family of Ethernet devices today. The new family should make telecommunications networks more versatile. And finally, Dell Computer up 1 11/16 at 43 and change. They're due to report second quarter earnings on Thursday. Analysts looking for 21 cents a share. So we still have some important earnings this week, most particularly Dell and Cisco, and they could help give some direction to this market. But we'll also be very closely watching the Fed all of August and any signs that may come out from the economic numbers that may influence their action. Right now, people are optimistic, perhaps, that there is not an interest rate hike in the near-term future. NASDAQ is now up 78 at 38.65. Back to you, Sasha.
Thanks very much, John Metaxas, coming to us from the NASDAQ. Well, it is time now to talk stocks, and our guest is Eugene Profit. He's president and portfolio manager at Profit Funds, and he is joining us here to answer your questions. Our phone number you need to call, 1-800-304-FNET. You can also email us. The address there is talking.stocks@turner.com. Now, we want to start out by welcoming you to Talking Stocks. We're glad to have you here.
Thanks, Sasha. Glad to be here.
And anybody who comes here with a year-to-date performance that's outpacing the market, we especially love having, and you definitely are. Your Profit Value Fund is up more than 5% year-to-date. There we see a one-year chart on it, PVALX. How have you done it? What's your secret?
Well, we are value investors, Sasha, but we look at companies from a relative standpoint. We believe in any market cycle there are always mispriced businesses, and the key to performance is finding those mispriced businesses and holding them until the market recognize the accurate value for those companies.
So that's how you define value in the market?
Oh, absolutely. I think that all value investors, to some extent, are looking for valuations in companies, price to earnings, price to cash flow. We believe that it's almost impossible to value companies' intangible assets, and so there's a lot of difficulty in coming up with accurate valuations on companies. So we're not opposed to stepping in and buying securities that have fallen off for one reason or another, that are not necessarily in value industries, but of values in comparison to their peers or to the market in general.
So it's really relative value here, I mean, rather than absolute numbers that you're using from a quantitative model.
Oh, absolutely. We do look at quantitative numbers, but we think that, for instance, in the case of a Coca-Cola, you can't value the intangible asset of the brand. So that even though Coca-Cola has a market cap of $145 billion, the brand might be $72 billion of that, give or take a few billion.
Right.
And same with the Berkshire Hathaway, for instance. You can't value the impact of Warren Buffett being the CEO of Berkshire Hathaway. Over the last 2 weeks, it's represented 20% from the time that the market realized that he survived his colon surgery to today. And so you can always find companies in the marketplace that for some reason that's correctable have fallen out of favor, and we like to pick up those securities with that margin of safety intact and hold them until they come back into favor.
And some of your top holdings, an interesting list, and not necessarily ones that you think of as value plays. I mean, you've got Cisco, Intel, Sun Micro, I mean, some of the biggest names on the NASDAQ.
Correct.
Did you buy in on these way early, or how does that fit in? How do those fit in?
Our largest holding is EMC Corporation. We bought EMC Corporation in December of '97 at a cost base of about $6 a share. If you look at it in today's market, it's trading at about 88, I believe.
Right around 89.
Where we differ from most value investors is that a lot of value investors would have sold out of EMC around the $21 point. We think that a company like EMC that's still making product, the public's still demanding that product, does not represent a situation where we should be selling that security. And so we're willing to let our winners ride, if you will, as long as the story has not changed and the margins are still expanding.
So can I then sort of deduce that when you do sell is when the story has changed and let's say the product's changed? I mean, when do you decide to sell, which is one of the toughest things folks say?
As you said, it's when the story changes, and that could be if a company has missed its earnings estimates and we can't get our hands around why that occurred, if there's a major lawsuit, like in the case of Microsoft, where we can't know what the valuation of that company will be at the conclusion of the legal proceedings, then those are situations where we might step aside and try to deploy our assets in other areas because we don't have any indication of what the ultimate outcome will be.
Will you add to positions in a company that you're especially bullish on, even at a higher level than when you originally bought in?
On occasion, but that's the most difficult thing we face because when a company has begun to do what we expected it to do, it's actually gone up in price, so it's more expensive. So the difficulty lies in deciding that that company is going to go much higher. See, sometimes we're not buyers, but we're not sellers. We're just letting the position that we have continue to grow. But on occasion, a situation like America Online, we might look at in a position like that when it's sold off for a reason that we think is correctable.
What's your total asset base for this particular fund, the Profit Value Fund?
The mutual fund is at an asset base of about $6.3 million.
So it's a small player.
It's a small fund that's being discovered, as we speak. Like what we like to tell people is that the $6.3 million that is in our fund has enjoyed a very good return over the last 3 years, and we're open for more assets.
Right. What's your 3-year performance?
We're up over 3 years, 21.94% annualized.
It's nice.
So, right, we rank in the top 1 or 2 funds under Lipper large cap value over the 3-year time period.
Interesting fact about your background, you didn't start out in money management. You were a pro football player.
Correct.
Tell us about that. You were with the Redskins and the New England Patriots?
Right. Well, football is a wonderful experience. And the way I got into money management was that I wrote my senior thesis at Yale on corporate strategy and economic analysis, and I had a decision coming out of school of whether to go to Wall Street or play professional football. And the New England Patriots gave me more money to sign my name to a contract, so I figured, well, let's go do that for a while. It's every sports person's dream to play football. It was a great experience. But since I've come back to what I love to do, and frankly, I was sort of surprised. I have now realized, some people starting to say that I'm a much better money manager than I ever was a football player, which I never would have expected, but that probably is coming out to bear.
So you played at Yale, and then you played for the Patriots, and what was your last year playing, I guess, for the Redskins?
Right. I retired in 1991 with torn hamstring muscles, which all football players generally end with an injury of some sort. And
what position were you?
I played defensive cornerback. And so fortunately, I had something else that I could do because I couldn't run as fast as I once could to keep up with the top receivers in the game.
Well, you certainly are running pretty well with this market because you're outperforming.
Right.
We are going to take our viewers' questions for you right after this break.
Sure.
We're speaking with Eugene Profit, President and CIO of the Profit Funds. Give us a call so you can ask him your questions directly. 1-800-304-FNET is the number to dial. We'll see you right after this break.